Can you invest in IDFC US equity fund of fund, another fund which is coming up and based on US market? So are you ready? Do you want to invest in it? That is what you're going to see. Hi, hello, this is Ganesh Senturu, your stock market profit coach and one author of One Page Stock Market Plan, where I help you in investing in stock market and create wealth. So let's look at in today's topic, can you invest in US IDFC US equity fund of fund and another fund in fund of fund category in that is but this is by IDFC mutual fund. Okay, this is by IDFC Mutual Fund. Just look at the NFO. NFO is from 29th July to 12th August. So enough time period is there. You can look at whether you want to invest. And this fund, and what they say is that there was a detailed presentation in the website. If you look at what they are saying is that there is a low correlation between Indian market and US stock market. Even in 2009 to 13, Indian market was lying low for a long time, whereas US market started recovering faster once the stimulus were given. Even in the last about 10 years, US market has delivered extraordinary returns compared to Indian market alone. So that based on this data, they are saying that it is best to invest in US market, right? So they have a unique approach. They say that this is the reason they want to invest in US market more than Indian market. The justification for this fund, why they are coming up with this. And let me show you the data of value of 10,000 invested in US market, Indian market, and combined the portfolio. 10,000 becomes 20,023 in India. It becomes 22,482. If 20% US market is considered, it becomes 33,087 rupees. 33,000 if it is US market alone. Just look at the data of 5-year returns and 26% in US, whereas in India it's just 13.7, 14%, whereas in US plus Indian market it is 16.4. So the returns are heavily towards US market. It says that you can always invest in US market compared to Indian market, and this is a small diversification. I'm not recommending fully go to US market because we there is a what to say, there is something like what if the risk is high in US market? If it falls down, we never know, and it's really difficult to track. So this is a diversification part. So maybe 20-30% you can, maybe 20% you can invest in funds. Say you're investing 10,000 rupees on a monthly basis, invest 2,000 rupees in this fund so that you are getting better returns compared to Indian stock market returns. And for that sake, if you look at sectoral funds, that can give you 15 to 20% in long run easily. That is also on another option you can look at. And if you look at US companies, majority of them are having global reach as well. If you look at Apple, Google, Alphabet, Netflix, or any other company, they are not only taking care of US market. They are taking care of US, global economic global markets. The best example is take Alphabet or take Google, which is having Google as well as Apple. They serve more 60%. Most of the companies serve 50 to 60% in US and remaining bigger percentage in global markets, China, India, and many other countries. So this is the advantage of investing in US companies more than Indian companies, because in India most of the companies are specific to India. They are slowly reaching out to Southeast Asia or African market, and if Indian market is not good, the it will affect the productivity, productions, and everything, and it will impact in Southeast Asian market continents based on countries based on that. But when it comes to US market, it's purely totally different. They source from different places and they are able to sell it off across different geographical locations. That is a huge advantage of US market profitability. And how this fund is going to get operated is that this Indian IDFC US equity fund of fund is partnered with JP Morgan US Growth Fund, and they are in the industry from 2000. They are given extraordinary returns in the last 20 years. So if you look at, you can always consider JP Morgan, which is one of the oldest banks in US market, and they are going to choose ESG compliant companies, environment, social responsibility, and growth oriented. So all these needs will be taken care before investing in a particular company. And ESG investing is for sure taking pick up, and fast growth is happening in ESG investments, because ESG is something everyone, if it's compliant, it's large cap companies which wants to grow, they are compliant with environment, social responsibility. It means they're taking care of their surroundings and the complete the revenue is not the only motive. They are taking care of environment as well, social responsibility as well, and growth. So all these are really important, I see. So that is the advantage of investing in ESG compliant companies, and the maximum expense ratio of this is again going to be around just 2.25%. And this is a US fund of fund. We are going to invest in Indian company is going to park the money in JP Morgan US growth fund, and they will invest in US market. It can be ETF, it can be any component. So it is up to JP Morgan to decide, and we are just going to put our money, and it is going to be across health sector, technology, consumption. And what they say is more than 60, 65, 69% is in US is driven by consumption. In US is a consumption driven economy, and we are going to take advantage. That is what they mentioned in the presentation. So are you somebody who hasn't done any investment in US focused fund of fund? Then this is a fund you can look at, IDFC US equity fund of fund, right? So it's not a ETF or index, it's a proper fund, and that is the reason expense ratio is around 2.25%. And what may be the returns you can expect? Maybe around 15 to 20%. And also invest with 5 plus years of investing mindset. Also, if you're investing a lump sum, you can do it. If you're investing in SIP, invest with long term portfolio. Thank you so much for watching. If please share this video with your friends who wants to know more about invest in US focused equity fund of fund. This is a way you can participate in US companies.